I now hand the conference over to Mr. Mayank Vaswani from CDR India. Thank you, and over to you, sir.
Thank you, Lizanne. Good afternoon, everyone, and thank you for joining us on this call to discuss the financial highlights of Apollo Hospitals for Q2 and H1 of fiscal year 21, which were announced yesterday. We have with us on the call today the senior management team comprising Mrs. Suneeta Reddy, Managing Director, Dr. Hariprasad, President of the Hospitals Division, Mr. A. Krishnan, Group CFO, Mr. C. Chandrasekhar, CEO of AHLL, Mr. Obul Reddy, CFO of the Pharmacy Business, and Mr. Sanjeev Gupta, CFO of Apollo 24/7. Before we begin, I would like to mention that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. Please note the disclaimer mentioning these risks and uncertainties on slide 2 of the investor presentation shared earlier. Documents relating to our financial performance have been shared with all of you, and these have also been posted on our corporate website. I would now like to turn the call over to Mrs. Suneeta Reddy for her opening remarks. Over to you, ma'am.
Good afternoon, everyone, and thank you for taking time out to join our call. I trust all of you have received our earnings document, which we had shared yesterday. COVID-19, which began in the fourth quarter of last financial year, accentuated to a full-fledged pandemic very quickly and necessitated the widespread government-mandated lockdowns and disruption to normal life. It had a huge impact on the hospital sector in Q1 FY21. The impact of the pandemic continued into Q2 FY21 and affected the hospital sector's performance. Air and rail travel continued to be disrupted, which prevented people from traveling for their healthcare needs. However, a gradual recovery in volumes and occupancy was visible, especially towards the latter half of Q2. There was visible traction both in terms of COVID patient flow as well as volumes in other specialties. In Q2 FY21, our total discharges showed an increase of 30% on a sequential quarter basis. Occupancy also improved to 56%. And as we move along in October, we have witnessed 65% occupancy, and it seems to be gathering momentum in November. This compared to the 38% in Q1. Total revenues increased by 27%. We saw an uptick in surgical discharges as well, which grew at 18% on a sequential quarter basis. COVID contributed to 26% of net revenues, with 36% share of the occupied beds. This quarter saw a very robust performance from new units. While the new units have been gaining traction and posting a EBITDA even pre-COVID, this quarter saw them record significant growth, with revenues not just growing 65% on a sequential quarter basis, but also growing 5% against Q2 FY20, which further reinforces the strong clinical foundation that we have laid in these units, which will help us shore up both revenues and profitability further in FY22 and beyond. Mature units continue to face an impact because of the restricted travel and muted OP recovery. The separation of the front-end pharmacy business into Apollo Pharmacies Limited was completed in this quarter, effective September 1st, 2020. AHLL now has a pharmacy distribution as its business segment while continuing to have 25.5% stake in Apollo Medicals Limited. The combined pharmacy business, including the front-end retail portion, delivered a strong revenue and EBITDA growth in Q2 FY21. The business reported a revenue of 1,474 crores in Q2 FY21 as compared to the revenue of 1,173 crores in Q2 FY20, representing a 25.7% growth. While overall EBITDA expanded to 97 crores in Q2, AHLL, which continues to be an exclusive distributor for Apollo Pharmacies, reported a 15% growth in revenues to 1,352 crores for quarter 2 and an EBITDA of 86 crores at 6.4% EBITDA margin. As the September month revenues now in AHL reflect only the back end of the pharmacy business. As we have stated earlier, we expect AHL to capture over 85% of the cash flows on the pharmacy business and around 80% of the EBITDA as the exclusive supplier to APL. Against that backdrop, let me walk you through the financials of the quarter. The company recorded a degrowth of 2% in standalone revenue to 2,414 crores and a degrowth in 3% in consolidated revenues to 2,761 crores. Pharmacy reported a double-digit revenue growth at 15%, while healthcare services degrew by 18% during the quarter. The quarter 2 FY21 EBITDA pre-India's 116 stood at 201 crores, a swing of 219 crores compared to the previous quarter. Within this, healthcare services EBITDA was at 114 crores compared to a negative EBITDA of 99 crores in quarter 1. The post-India's EBITDA was at 248 crores. As already mentioned, revenues and EBITDA in our pharmacy vertical were at healthy levels this quarter. EBITDA higher by 22% against the same quarter last year. EBITDA margins at 6.4%. Sales from private labels have moved to around 10%. AHLL recorded an EBITDA of 5 crores as compared to the 3 crores of quarter 2 FY20. The business has recorded a 5% growth in top line due to the impact of clinics and Spectra business due to COVID. But the combination of a strong performance in both Cradle and the diagnostic vertical there has been a tight focus on cost control by the AHLL management team, which enables a smart recovery of the overall business. Standalone net debt as of 30th September 2020 was at 2,564 crores and consolidated net worth 1,837 crores, a debt-to-equity ratio of 0.80. Our board has approved the acquisition of the balance 50% stake in Apollo Gleneagles Hospital, Kolkata. Our joint venture partner, IHH, for a consideration of 410 crores. We expect to conclude this transaction by the end of the month. This acquisition will further solidify our footprint in Eastern India, where we have a high degree of brand salience, and the hospital is the largest in terms of both beds and revenues in the city of Kolkata. We have plans to further enhance our penetration in the eastern region, including West Bengal and Assam, both of which we believe are very promising markets for Apollo. The board has also approved increasing our stake in Apollo Medics Lucknow to 51%, by which the company becomes a subsidiary of AHEL. Apollo Medics reported a top line of 90 crores and an EBITDA of 15 crores for the first half of FY21. We believe this development is in line with our strategic plans for the north of the region. For funding the Kolkata transaction, as well as for further debt reduction and growth capital preparedness, the board has also approved of an equity raise through preferential issue or qualified institutional placement of up to 1,500 crores. We will carefully determine the timing and quantum of the issue as well as the itemized end use in the upcoming weeks. This quarter saw us make significant progress in our objective to move closer to the consumer, whether it is by accelerating the adoption of our app Apollo 24/7 or by our intensified efforts in home care. We stayed true to our philosophy of putting the consumer at the center of our work. In just over 6 months, Apollo 24/7, we have 5 million registered users. Over 2,500 teleconsults are being completed on the app every day. We are working to ensure that Apollo 24/7 evolves to become the nation's foremost integrated digital healthcare ecosystem with services and features that fulfill every healthcare requirement. Our effort in the home care segment enabled us to move into more than 17,900 homes, of which COVID care was 9,000 during H1 of this year, and provide medically supervised home isolation services. We believe more and more home-based services coupled with remote healthcare and integrated IoT will be a defining trend and expand our service offering and capability to meet this demand. From a technology standpoint, we continue to invest in strong consumer-facing medical technologies. A Toshiba Aquilon 1CT scan machine, a 640 slice scanner with 320 detectors in Chennai that is quick enough to take an image in between two heartbeats with outstanding precision and quality, and is a best-in-class diagnostic mechanism which is available for both cardiac and stroke patients, was installed in Chennai. As you know, the Apollo Hospitals network performs the highest number of robot-assisted surgeries. We are happy to report that another 30 of our best clinicians are currently undergoing robotic training, and it will accelerate the growth of our robotics practice across the country. We have also established a countrywide practice in structural and interventional cardiology within our cardiac COE, where we can see outstanding results. Before I conclude, I am happy to share the Times Health Survey recognizing Apollo Hospitals Chennai as the best multi-speciality hospital in India. 3 of the top 5 of the 20 hospitals in the national rankings are part of the Apollo Hospital Group. I would like to thank our consumers for placing their faith in our hospitals for the last 37 years. This has inspired us to continually innovate and become better at what we do. So that's it for me for now. I have Dr. Hariprasad, Krishnan, Reddy, Chandra, and Sanjeev with us to take your questions. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, good afternoon, and thanks for the opportunity. Just the first question on, the fundraise and Kolkata. So, understand, the prayer for the QIP 1,500 crores, whereas Kolkata is 410. So, what is the plan ahead, either to expand in Kolkata or, the eastern region or pan-India? How do we plan to use the remaining cash? And the second part is on Kolkata. If we see the first half FY20, EBITDA is 44 odd crores. That's the pre-OMA fee. So would the OMA fees change with this transaction, or how should we think about the operating performance of Apollo going forward? Thank you.
So your first question was on the end use of the funds. We have not, completely committed to 1,500. But having said that, I want to say that 410 crores will be used for the Calcutta acquisition. We have set aside a portion of the money to invest into 24/7, our digital app. We are also preparing our balance sheet in case there are some bolt-on acquisitions that come our way and with, at the right price. The rest of the money will be used to reduce our debt because we truly believe that, this will enhance our profitability. And also, like mentioned earlier, we are looking at some bolt-on acquisitions, so this will help to fund that. With regard to Calcutta, you asked about the OMA fee. We have, from September onwards, from the whole year, in fact, we are not paying the OMA fee. So even though the transaction will complete by the end of November, no OMA fees will be paid to either of the partners.
Okay, perfect. That helps. And lastly, on the occupancy, so I missed your point on what was the exit run rate of September and October. I believe you said about 65%.
So yeah, you're right. The quarter we gave 56% for the full quarter. September was around over 60% was the number for September. And as we speak in October, it's well over 60% as we speak.
And we used to be break-even at around 50%, if I'm not wrong.
That is correct. Around 50, yeah, that's right.
Okay, and we are currently upwards of 60%.
That's right. So we are well above break-even, right? If you look at Q2 also, we have given our results are well above break-even.
Yeah, perfect. Great. I have no question. I'll join back. Thank you.
Thank you. The next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Hi, good afternoon, and thank you for taking my question. Just on the occupancy and the related margins again, if I look at mature hospitals, for the first quarter, for the second quarter, you still have reported like low teens, low double-digit margins. So what will take us to get to the historical 21-22% margins in terms of occupancy? We are clearly reaching. I can understand the mix, but just the second half in terms of the recovery in the margins, especially in the mature hospitals. That's the first question.
So mature hospitals, there is as you know, the bulk of some of the mature hospitals like Chennai and Hyderabad and Bangalore also, the thing is, as you know, they are all centers of excellence and they are all large multi-speciality hospitals with also patients coming from out of station, right? Clearly, that is one thing that should pick up. We have seen some pickup happening in out-of-station patients. We have also seen those one-odd patients who have now started coming back from West Bengal and Assam to Chennai. So it is picking up. We are seeing that, September has been a much better month in both these. I guess we will have to ensure that there is, the biggest worry that people still have is this surge in cases which can happen beyond Diwali, which people are a bit worried about, right? So I guess it's more about how the people are going to get more comfortable with the fact that, COVID is not going to rise again. And once they see that, some of them will start coming back. So it's anyone's guess. So that's, we get, as we said, October month has been at least 20% better than the average of Q2. So hopefully if that plays out, the quarter should be better than Q2. But, some of the mature hospitals we'll have to wait for some of the outpatients to return as well as the out-of-station patients to return.
Yeah, Krishnan, just following up, this 20% is revenue occupancy. Sorry, what is the 20%?
20% is the increase that we are seeing in revenue and occupancy in October versus the Q2 average.
Got it. Okay, that's helpful. Second question is on the SAP business, right? The standalone pharmacies. 85% is the economics. You said in terms of revenue and 80% in EBITDA. Is that right? Am I hearing that right?
So 85% so roughly around 80% would be the EBITDA that would be captured in AHEL for now. Revenue we will have to come back because it was the first month that we did the revenue. So it depends on how the costs shifts from the back end to the front end. So if there is a bigger shift of costs from back end to front end, then the revenue number will accordingly shift. So more than the revenue number, I think the EBITDA number would be at approximately 80% of the overall EBITDA of the pharmacy business.
Got it. And just on the network expansion for the pharmacy, right? I noticed that about 70 net new additions were there, like bulk of the first half additions. So what's the outlook here? And just from a who decides the network rollout now? Is it Apollo? Is it the sub? How should we understand the strategy for the network rollout for the pharmacies?
Yeah, this will be decided at the Apollo pharmacies level going forward. But whatever is for the current year, the plan was envisaged and approved in the last year. Q1 we could not do because of the COVID restrictions. And Q2 we are back with the network expansion. Hopefully we will continue in the next quarter given the situation unless the COVID comes back. So we are on track on that. But every decision on the expansion will be at Apollo pharmacies new entity level going forward.
Yeah, and my last question is on Apollo 24/7. So if you can, some of the numbers are very impressive, but in terms of financial impact, either in revenue or profit contribution, if any, I know might be early, if you can share some numbers, please. Thank you.
So as of now, it's a bit early for us to share any of these. We would like to, it will take us a couple of quarters before we can share some of these numbers.
Okay, thank you, Krishnan. All the best.
Thank you.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, hi, good afternoon. One, Krishnan, just wanted to get some clarity on this standalone pharmacy business, the reorganization that we've done. So when you report that like-to-like EBITDA in this quarter was about 97 crores, and the NCLT approval you got from 1st of September, and then in the what you record in EBITDA after this event is 86 crores. So the gap of 11 crores, I just wanted to understand. So the gap of 11 crores, does that correspond to 1 month? Then it looks very high. I just couldn't place this gap of 11 crores. Can you help me understand that?
So yes, for this, there were certain transition costs in this quarter also because there was a cost related to the transition which was there in the books of the back-end pharmacy, which is why, you're not able to appreciate that overall number. But, broadly, as we said, it will be around 80% of the overall EBITDA will get reflected in the back-end as we move forward.
Okay. And second question was on Apollo 24/7. So I appreciate numbers right now may not be very significant, but the revenue and expenses, which segment are you recording right now in the numbers? Where does it reflect?
It's part of pharmacies for now.
It's part of both revenue and expenses, both are reflecting in pharmacy? Or you are, or some of the...
As part of back-end pharmacy.
Back-end pharmacies. But are you reporting all the expenses right now, or some of them are getting capitalized right now?
All of them are getting reported.
Okay.
So the capitalization which is related to the technology cost will get capitalized. The non-technology cost and the assets and the cost which is not related to creation of the technology is already part of our operating cost.
Sure. And last question I had was on the growth capex. This year, of course, you've been talking about low numbers, understandably, but when you think about capex for next 2 or 3 years, because now you're thinking about equity raise also, when Suneeta ma'am was talking about, she did not talk about organic capex being high for the company. She was talking about bolt-on acquisition. So what's the plan in terms of organic capex? Are we looking to, let's say, would we see any of the years where, in terms of capex, Apollo will be spending about more than 500, 600 crore a year on the company on organic capex?
No, we won't.
So that's not the plan. So organic capex would not be over 200, 250 crores. That's what we have been guiding this year at the start, and then we brought it down to almost half. So, organic capex was that. And inorganic bolt-on, as Ms. Suneeta already said, we will look at opportunistic investments, in the strategic markets that we want more presence in.
Sure, that's helpful. But just one related clarification on this. If that's the thought process, then this equity raise we could have avoided actually. I can understand it will help strengthen the balance sheet, but by any means we will do Ind AS adjusted EBITDA of 1,500 crore plus in each year next year onwards. That will give me cash flow for at least 1,000 crores. That would have been sufficient enough to do this 400 crore acquisition and take care of anything in future, because debt to EBITDA for us is less than 2x in that respect. So what was the urgent need to do this capital raise?
So as Suneeta said, bolt-on acquisitions is one that we will have to wait and see how there are opportunities in select markets. Clearly we have a focus on increasing our presence now further in North and East. Both of these are attractive markets for us from given that now with our presence in having 100% investment now in East, we definitely feel East is one that we can further look at enhancing our presence. There are good assets at good prices available, so we will look at it.
Okay, thank you very much.
And I said up to 1,500 crores. So it's only by the end of the next quarter that we'll decide the absolute amount.
Sure, thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Tarang from Old Bridge. Please go ahead.
Hello, good afternoon. 2 questions from my side. Is there any debt on Gleneagles Apollo Hospitals books?
No, there aren't any debt in Apollo Hospital Gleneagles books.
Okay. The second question is, as a business construct, once a hospital starts approaching maturity, what is the occupancy standard or, the occupancy that you hope that the hospital achieves and consequently the return on capital employed for a mature hospital?
So the way we look at it, if you look at it before the COVID, if you look at the mature hospitals, they were at almost around 22% ROC. And that was the ROC prior to COVID. And typically, a new hospital we would expect it to get to mid-teens, in at least 5 to 6 years from the time it starts operations.
And occupancy for your portfolio of mature hospitals in a steady state without COVID?
67% was the overall occupancy without COVID.
This could inch up to maybe 80% as we move forward?
75 is where we think it can go up to. Select hospitals can go to 80.
Sure. Thank you.
Thank you. The next question is from the line of Shantanu Basu from SMIFS. Please go ahead.
Hi, good afternoon. Thanks for the opportunity. Now, if you can share with me the overall Q2 ARPOB and the COVID ARPOB, and along with that, the COVID beds and the COVID beds occupancy percentage. And I would also like to know whether, with regard to the pharmacy distribution segment, which you reported as a segment item, is it for only 1 month, that is for the month of September, and consequently the retail pharmacy reporting is for 2 months, that is July and August?
So first about your COVID ARPOB, our COVID ARPOB is approximately 20% lower than our overall ARPOB that we have reported. That's the first point that you wanted. And our COVID occupancy is around 30% of our overall occupancy for Q2. That's your first point. And the point on pharmacy,
Yeah, that is for the 1 month separate accounts and 2 month combined accounts. It is an aggregation of the total for the Q2.
So the pharmacy distribution segment, 36,118 lakhs, that is for the month of, I'm talking about the revenue, that is only for the month of September.
That's right.
And the retail pharmacy item, which is 99,070 lakhs, that is for 2 months, July and August.
That's right.
Okay.
This is why the overall growth reflects as 15% because there is a reset in the way the accounting has happened from 1st of September. So you will see this aberration for until 4 quarters till the time the like-to-like starts coming up and showing. But we will give you the combined revenue growth as an annexure for you to get an understanding of how the pharmacy is growing.
Great. Okay.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The The next question is from the line of Nitin Gochar from Invesco. Please go ahead.
Yeah, hi team. Krishnan, during the previous call when we had about the retail pharmacy, you had mentioned that 85% of the business economics will get captured in the listed entity. Today you quoted around 80. Has there been any change in the terms of the deal, or what are we missing right now?
So I think 80 to 85 is a number that we will still capture. 85. So as of now, it will be 80 because of the costs, that are going into the front-end pharmacy, which has got shifted. But, as the ramp-up happens and as some of the business ramps up there, you will get it to 85% here with time. So around 80 to 85% is the number. So there has been some additional cost which has been shifted out there, which has to be borne there also. So around 80%, there's no difference, there's no major change in the business economics as we speak.
Okay. In that case, if I may ask, what has been the change over last 1 year? Because that's the time period that we discussed, 85 and today.
85% of the cash will still come here, So at that time, it was obviously based on projections, right? It was based on the projections that we had in the books, etc. Now, as we are rolling it out, it's more about, there is a GST adjustment, there is a cost of the transfer which we have to do from here to there. So it's more about accounting, which is resulting in some of this. The intent is definitely, as we said, to continue all the bulk of the economics in AHEL. That is what is the intent.
Okay. And when do you think this 85% can be hit, over a period of what time?
I think over the next 1 to 2 years, we will get there to 85%.
Okay. And second question was on bolt-on acquisition. North, as we all know, is heavily crowded region when it comes to corporate hospitals. Is that area of a prime consideration for us?
So I didn't hear the last part of your question, but from what I heard about the North, I think what we've done now is to put a placeholder in all the feeder markets, which is what our Lucknow strategy was all about.
Okay.
We also have one coming in Kanpur. So clearly, this is something that has been part of our strategy. And the fact that these hospitals, that Lucknow broke even within 18 months, is proof that we did, our investment hypothesis was the correct one.
Okay.
In terms of Delhi, right now it's too early to share any plan, but hopefully we will have a strong presence in Delhi at some time.
Okay. Yeah. Thank you.
Thank you. The next question is from the line of Sriram Rathi from ICICI Securities. Please go ahead. Mr. Rathi, your line is in the talk mode. Please go ahead.
Yeah, am I audible now?
Yes, sir. Please go ahead. Thank you.
Sure. Thank you. Thanks for taking my question. Mainly, firstly, since in October we have seen 65% occupancy. So, any color if you can provide, how is the traction in the patients coming from different cities to our mature hospitals? Has that increased and it is at what level of the pre-COVID level?
So I think the important thing to note here is that our local patients have grown dramatically. Earlier, 30% of the local, our occupancy, only 30% was local patients. Now that's moved to 60%, which is a good thing because if anything happens in the future, we've created a stickiness within our local community. Having said that, the travel in India has opened up and we are seeing traction. Patients are starting to come, which is why the higher November occupancy inching towards 70%.
Okay, got it. Thank you. And secondly, on personnel cost, there has been decline of 7 to 8% on Q2 basis. Any specific reason for the same?
So as of now, we have been, there has been an exercise where, we have been ensuring that there has been productivity linked. We have not increased some of the manpower who have left us. So we have been ensuring that we manage the hospitals without that incremental cost, and that we expect will continue into the next year also. Some of that, will continue into the next year. We are hoping that, the overall cost reduction, which should get into FY22, should be in the range of 120 to 150 crores.
Okay, great. That's
Manpower and admin put together.
Okay. So this should be the new base that we should look for now going forward.
Yes.
Okay. And lastly, just to understand, this pharmacy distribution revenue, this will be classified like this way only, right? Going forward, whatever is pertaining to the front-end pharmacy.
Yeah, it will be reported in the same as a distribution segment.
Okay, got it. Thank you.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Thank you, and good afternoon, everyone. Just on the expansion bit, is Green...
Sorry to interrupt, Mr. Baisiwala. We are not able to hear you. Mr. Sameer Baisiwala, we have lost the audio from your line.
Yeah, can you hear me?
Yes, sir. Please go ahead.
Yeah, hi. Good afternoon, everyone. So I was asking that as far as expansion is concerned, is greenfield type expansion is totally off the table?
Yes, for this time.
Okay. So this cycle is more about both on acquisitions. So just on that point, is it like 200, 300 bed type, acquisitions that we are looking at? Smaller, bigger? If you can just help us with that.
Yes, certainly smaller, because as we look at the reduction in ALOS and the fact that Apollo is really focusing on increasing surgical volume, we're also increasing robotic utilization, which means that the ALOS comes down and the ARPOB goes up, and the ideal size would be somewhere around 300 in a big city and 200 if it's in a smaller city.
Okay, got it. And the second question is on the COVID business. Looks like it's roughly about 25% of the total hospital business, if I'm not wrong. So what's the trajectory for this business going forward? And is there thinking that this continues to taper down and the core business goes up, so net the overall growth doesn't come back as fast as we thought it will come back?
So you were right. This business will taper down. Regular growth will come back, and but we feel till December we need to keep a certain bed allocation for COVID in case there is a surge post Diwali.
But as of now, as we said, for the month of October, Sameer, we have seen a 20% increase versus Q2. So there is an overall increased traction in the overall business. So Q3 should be better than Q2.
Okay, got it. And one final one. Looks like there's been a fairly significant quarter-on-quarter decline in net debt, roughly 400-450 crores on a consolidated basis. So what's helping us over here? Is it some one-time thing, or do you think this is going to continue?
So this is a one-time thing, which is the payment of 500 crores that came from the pharmacy, where we transferred the front end to Apollo Pharmacy.
Okay, got it. Yeah, thank you so much. Yeah.
Thank you. The next question is from the line of Neha Manpuria from JP Morgan. Please go ahead.
Thank you for taking my question. My first question is on the ARPOB increase that we've seen, particularly in our AP Telangana and the others cluster. Given that COVID realizations are 20% below.
Ms. Manpuria, your voice is sounding muffled.
Is it better?
A little better. Thank you.
Yeah, apologies for that. So, given that the COVID realizations are lower than our average realization, what's driving this ARPOB improvement? Is it because we're seeing only very high-end work coming, which could normalize as full recovery or full normalization happens in the market?
So I think it's a combination of two. One is that the severe COVID cases that we take really does contribute to higher ARPOB. Also, now that We've started with all the surgical work, and we're really focused on the surgical work. The RPOB has moved up, so it's definitely a combination of both.
Understood. And my second question is on AHLL. Since you mentioned in your opening remarks that there has been an improvement, an increase and diagnostics has done well, I'm assuming there must be, a good enough contribution from COVID tests, on the AHLL business. So if I exclude that part of the, revenue or EBITDA, how was the underlying performance of AHLL?
Yeah, I'll answer that. The overall contribution of COVID testing to AHLL for the first half was 7% at AHLL. So the good show and the good performance that has happened has been via quarter-on-quarter significant ramp-up across all verticals. We're getting back to near normal in areas which mentioned spectra and clinics which were very poor in the first quarter are getting back to near normal. It is 7% on a first half basis is the contribution of COVID revenue. In diagnostics alone, that number would be roughly around 30%. COVID testing.
Understood.
Only for the diagnostics. So it's and then from a comparison on quarter-on-quarter, Q2 FY21 is only 5% behind Q2 FY20. So we're getting back to normal at an AHLL level.
Okay, understood. Okay, so it's just 5% below the normal level. Is that what you're trying to say?
Yes, that's
okay. Okay, understood. And my last question is on the mature hospital profitability. Given that we are gaining share in local markets, at some point of time, let's say even if the outstation patients don't come back in its full, any time in the next 6-9 months, just by increasing the local market share, will we be able to see an improvement, in the profitability? Because I'm assuming the patients from the local market might not necessarily be, surgical procedures or high-end procedures necessarily.
Dr. Hari, you want to take that because especially the local market plan that we have? Dr. Hari?
So?
Yeah. Can you hear me?
Yeah.
Yes, now.
Yeah, as already we've seen a significant increase in the local market share in each of the major cities that we are present, and I think that's a great thing to happen because that is the stickiness that we wanted. And second thing is because of the experience that they've had with us, most of the patients who are admitted with COVID in the hospitals are local patients, and these patients are going to stick with us and for their regular healthcare needs as they come about. And the third thing which we are noticing is a significant proportion of the patients who have recovered from COVID are landing up with post-COVID syndrome, which includes major issues like a heart attack or a stroke and stuff like that. And that is another thing which we are saying we're seeing where the patients are coming back, and that was one of the reasons that we were the first to launch the recover clinics for the post-COVID patients. So all put together, we see a positive side for the local market share in increasing the margins and increasing the occupancy levels.
Understood. Thank you so much.
Thank you. The next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, good afternoon. Thank you for the opportunity. I have 3 questions. So first, if you can provide some update on international patients, whether we are getting some queries at least from the neighboring countries. Similarly, if you can provide update on the proton facility utilization. So that's my first question.
So on international, okay, Hari, you want to take it?
On international patients, we are now nowhere close to coming back to normal, but we have started, the trickle has started in, especially from neighboring countries. We are seeing patients coming in from Bangladesh, and we're seeing some patients coming in from Myanmar into our facilities, particularly Delhi and Chennai. but we're still a long way off from the pre-COVID levels of international patients. But with the travel opening up, we are hoping that they will come back sooner than later. That's about the international patients.
Okay. Yeah. On Proton?
Proton, because of COVID, there was definitely a decrease in utilization. The one thing that, so all the foreign patients dropped off, and it resulted in a loss of 2.3 crores for the quarter. But once the international travel comes back, we believe that this will come back very quickly. The other thing that we're seeing is that now that the domestic travel has opened up, people are coming, those who go abroad for cancer treatment have started coming into our cancer care centers in Chennai.
Okay, so though we are seeing improvement, it will broadly depend on normalization of international patient flow for Proton, right?
No, we're quite sure that next quarter you'll see a EBITDA break-even.
Okay, so EBITDA break-even in third quarter or fourth quarter?
Third.
Okay, ma'am. Ma'am, another question on cost savings. So you mentioned 120 to 150 crore kind of cost savings. So can you elaborate more on what are the key levers which should help you to achieve this kind of cost savings, given now costs are also normalizing with normalizing operations?
Okay, I think the first element of cost is that in variable cost, we've reduced the cost of consumables, and we've really done this in two ways. One is that we've looked at some of the local suppliers to see if we could replace the imported. The second thing that we've done is that there's a huge amount of waste that we've reduced. So, our stocking policy has improved, our utilization of consumables has improved, and hopefully you will see it in a better contribution margin by the end of the year. And the second part of it, Hari, you want to do it?
No, I just said kitting also, kitting of the consumables.
So the kitting that was done for surgical procedures is something that will effectively control utilization. The second part of it is the fact that in fixed costs, we've looked at the key elements of fixed costs. Among them was HR costs, where we've rationalized our HR costs. Those that left us during COVID, we've not taken them back. That is brought down HR costs. Doctors guarantee money, which we paid out, in last year. That has also been rationalized and reduced. The third element of it is outsourcing. We've reduced outsourcing costs. The fourth, of course, is, all that has to do with marketing, travel. All of this, I think COVID has taught us many lessons, and among them is the fact that our expenditure has now moved to more of digital marketing away from the regular type of advertising that we used to do. Travel, of course, has come down, but we've looked at every possible lever, including rent, to see where we can save money, and we truly believe that while we registered 180 crores of cost saving for the first 2 quarters, we believe that we will be able to achieve a structural cost saving going forward between 12 to 15%.
Okay, ma'am, that's helpful. And third and final question, ma'am, if you can share your thoughts on some of the government initiative which is currently underway for improved uptake of digital health adoption in India. So that is in context of your uptake for Apollo 24/7. So any thoughts from your side would be helpful.
So at this time, I have to, Shobhana, my sister, is part of the National Digital Health Mission. So since she's not here on that call, I'm not able to elaborate. But Sanjeev, do you have any insight?
Not, ma'am. At this point of time, I do not have anything on this.
It's also very early to comment on it because it is work in progress and they're looking at it from every side, including data privacy, etc. So next quarter we'll give you more insights into that.
Yeah, that will be helpful. Thank you very much for your answers.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, thank you. Krishnan, one clarity. On the standalone pharmacy business, we used to spend about 70-80 crore capex earlier. Now in the new structure, what will be capex on our books? Or will there be anything or everything will be done by the front end?
Everything will be done by the front end.
So effectively, what's happening, the 20% that we are losing on EBITDA is being spent by them on the capex.
Yeah, and capex is not about 70-80 crores. It's roughly about 50 crores.
Oh, yeah. So that is working capital, right?
That's right, Anubhav. So that's exactly the point that I stated that, when some of the, when the capex is higher, there would be some EBITDA which is going to be higher there, So those are some of the things which will happen. But the economics, broadly will be captured at Apollo Hospitals. As of now, we think it will be around the 80%. That's where we stand. All right. And
one question was on the diagnostic business. So excluding COVID, we are tracking right now roughly about 150 crore a year at the top line. When do you think this becomes about 500 crore business for us? Because we've been tracking that you guys have been expanding networks very sharply on this. So when do you think 500 crore is achievable?
Chandra?
Organically, we're looking at it 3 years from now. But we are keeping an eye on faster ramp up via inorganic mechanisms. But on a pure organic basis, it could be 2 to 3 years.
And what would be the split of that roughly 500 crores? Like how much south, how much east, roughly 70-30 or what?
I think our markets where we have invested and we have gone deeper are south and east. So I think even with gradual expansion into north and east could contribute, north and west could contribute only up to 30-35%, because our consolidation and deeper regional presence will continue in south and east, where we are already committed and we have created the network. In a 2 to 3 year time frame, the north and west could be in the region of 30-35%.
Okay. And just last question was on the utilization for our Tamil Nadu and Hyderabad cluster. So in 2Q, we were less than 50%. When you say in October, our system utilization is more than 60%, how are those two clusters tracking in terms of utilization?
So I think both the clusters are looking better in October compared to September. And, I think Tamil Nadu, as Chennai in particular, will take another 1 quarter to pick up because of the outpatient and the outstation dependency, as I said. Otherwise, both the clusters outside of Chennai is doing well in Tamil Nadu, and Hyderabad is doing well.
Okay. Thank you, Vishnu.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Thank you, ladies and gentlemen, for joining us on this call. The last few months have been extremely challenging for all of us, and we have had to rapidly respond to unprecedented demands. In the process, we have treated 22,000 COVID patients. We've done testing for over 2.5 lakh patients. I believe that the work we did during the COVID time was not about profitability, but more about purpose. And I would like to congratulate my team for the incredible work that they've done. But I would also like to thank all of you for supporting us through 2 difficult quarters. What I can assure you is that going forward into the next quarter and the quarter after that, we will be back in terms of numbers, we will be back in terms of revenues. And I think the version of Apollo that you will see in 2021 will be a sharper version. By the end of 21 will be something that is a sharper version of ourselves. something that is more patient-friendly, moving closer to the consumer, and something that can face any challenge which we've learned to fight during this period. Beyond COVID, we have also strongly demonstrated our strategic focus by acquiring the balance stake in our Kolkata asset and increasing our stake in Lucknow, which is in line with our intent to grow our core healthcare delivery services in the northern and eastern regions. We have complete confidence in the future of the business, and therefore, we have obtained board approval for all the strategic moves that we've made this quarter. We look forward to further interactions with you during the quarter and the next quarter. Thank you again for your support, and happy Deepavali to you and to all your families.